initial tech boom, if you will, that we had in New Orleans was what a lot of people attribute to post-Katrina revitalization, right? So post-Hurricane Katrina, right, there was a huge washout, right, a lot of damage, and then a lot of stuff started getting fixed. The city started bouncing back and coming back. And on the tail end of that, right, cost of living was very low, high cultural epicenter, and so it became this magnet for a lot of people.
Welcome, everybody. I'm Mark Peter Davis, Managing Partner of Interplay. On this podcast, I interview innovators about their strategies, industries, and decisions. Today, we have Hal Callais on the show. He's the Managing Partner and CIO of Callais Capital. They are based in southern Louisiana, and Callais Capital makes venture investments in technology companies in the region, in the South generally, and also focusing more exclusively on the Mississippi River Delta region. Hal is, interestingly, from a multi-generational family of entrepreneurs in Louisiana. He's very connected to the geography, and he is very much helping to catalyze entrepreneurship in the region. I think he's playing a crucial role in bringing New Orleans up on the startup side of the world. I thought this was a really unique conversation, a way to see into a very nascent ecosystem and get a sense of what it's like in the earlier days than I experienced when I joined in the New York ecosystem in 2006. During the chat, we discussed the current state of tech, venture, innovation out in New Orleans and beyond. And we talked about how the ecosystem has evolved and changed post-Katrina. We cover what the scene needs to keep growing and much more. I hope you enjoy. This episode is brought to you by Spoke. Spoke is a full-service outsourcing firm providing high-quality, low-cost solutions for all types of operational and back-office functions, including customer service, data science, HR, and supply chain management. They help companies scale their operations while keeping down their costs. If you're interested in learning more, visit gospoke.co. All right, welcome, Hal.
Hey, Mark, how's it going, man?
Doing all right. Thanks for being here.
Oh, happy to be here.
All right, so let's dive in. I think it's good to baseline the conversation. Would you give everyone listening an overview of Callais Capital so they have a little sense of what you guys do and what you focus on?
Yeah, absolutely. So Callais Capital, we are an alternative asset manager. We specialize and really focus our attention around young companies, typically in the seed, Series A, Series B kind of categories. And, we're investing kind of programmatically and, have been doing so for about, 8 years now.
That's great. Now, and you guys are based just outside New Orleans? Is the office in New Orleans, or how are you guys structured?
So we are, so I guess technically we're based in a town called Thibodeau. And there's an X at the end, so have fun spelling it if you're not from here. It's one of those French things. But we only have like 3 of our team here. Myself being one of them. We're about an hour outside the city. My brother and Mark are based in New Orleans. They kind of work, out of their house. They, Mark's got his office in uptown New Orleans, and it's spent a lot of time there.
Okay, perfect. Let's talk about your investing. What's the typical investment profile? What type of companies are you looking for?
Sure. So we view the world as a generalist, right? So we like to look at companies based on metrics and fit within a market. Generally the companies we're investing in are growing pretty quickly, have a concept and a lot of the groundwork put into place and laid out. So those that may not be producing revenue, we'll consider them based on contracts in the pipeline, validity of the business model. If it's a space that we're really passionate about it, we know a lot about, then we get really excited. But generally, it's a lot of the companies are software, mobile, tech-enabled services. We do some e-commerce. We've done some CPG, and kind of everything between. I really like software. I really like software as a service. We do a lot of direct to consumer, but we do a lot of enterprise as well. Just kind of a blend. it's really based on the opportunity, the market segment, and kind of the overall profile of the company and how it's selling into the market.
And geographically, you're focused locally to you, right? So it's New Orleans, other cities.
So we're focused really kind of the way we describe it is kind of the perpendicular lines of I-10 and the Mississippi River, right? So think kind of central U.S. and Gulf Coast primarily. We'll go up to Georgia, the Carolinas on occasion, but really our bread and butter in knitting is kind of the core of the Mississippi River Delta, kind of the whole watershed.
Mm-hmm. And is most of are most of your deals in that area, or what's the concentration like? Are there cities that you find yourself in other than New Orleans?
Yes, we do. So I mean, speaking about like Louisiana, kind of in its own distinct startup ecosystem kind of thought process, right? Is that kind of there's certain bespoke like hubs, right, where there's like a little clustering of deals, right? So it's almost like you think about San Francisco or New York, and there's like cluster of like segments of the single town. It's kind of how it fits together, and just Louisiana in a microcosm. We find the same thing happens in Mississippi, same thing happens in Alabama, Florida, parts of Texas, and all these territories, right? There's clustering around the big cities. In Louisiana, just kind of going back to that example, is that we've done a bunch of deals out of New Orleans. We've done one in Lafayette. I've done a deal in Alabama. I don't think I've done any in Mississippi yet. There's a couple that we're talking to that we're pretty excited about, and there's a few more in Alabama, Birmingham, and Mobile areas that are kind of interesting. Alabama's got its own whole market really well developed and established. Same thing goes with parts of Houston and Austin, bits of San Antonio as well. But, we're looking at those markets as well. We view a lot of those more collaborative markets, whereas like we view ourselves, and same thing with Missouri and working with some of the funds there. And, but we view ourselves as kind of more of a lead and primary in some of our home markets. That's kind of the stuff that we aim to lead and really kind of spend a lot of time cultivating relationships and building a deal flow there.
Got it. And you're typically leading if it's local.
That's right. Yes. And we find that a lot of funds that we work with really like that, because typically we're the small guy, we kind of, like to think we punch above our weight class.
Right.
Is that we work really well with a lot of other funds, and, we take a market approach, we're members of NVCA. Mm-hmm. And so we work with a lot of groups that are part of NVCA and that abide or follow a lot of those model documents and structures and all that stuff. So we tend to try and be as middle of the fairway in market as we can. Number one, make sure that the deal is fair for all parties. Number two is that it's financeable, whether, by additional capital that's syndicated in the round or it's by future rounds of funding, right? We don't want anything wonky going on that's going to prevent somebody else from funding it later.
Right. Every VC's got a sales pitch that they give to entrepreneurs. Obviously, when they're raising money, they got a sales pitch. But when they give to entrepreneurs and meet them, they're talking about why entrepreneurs should pick them. What's the Callais Capital pitch? Why should entrepreneurs work with you?
Man, we're awesome. We'll take you fishing. Enough
There's
said.
A slogan
right
there.
Right. It's enough said. No, so I mean, our approach is really, in our pitch to the founders that we've got a lot of experience and a lot of and a pretty wide network, right? Between myself and my partners, we've all kind of spent a good bit of time really cultivating, developing relationships that really span across our markets and span across time. And I have a benefit of growing up as part of a entrepreneurial family. And really focusing in on what it takes and what's required of that, and kind of the entrepreneurial journey, which is it's a hard journey. Our view is that I tell my founders this all the time. I'm not your ideal operator, right? Like, you don't want me being CEO of your business. That's not my skill set. I'm not good at that, right? What we are good at is we're good at financing. We're good at putting together deals. We're good at working through deals. We're good at setting companies up for exit and or strategic follow-on, or a lot of other call it strategic transactions, making sure that nothing weird is going on, making sure that everybody's being taken care of, right? I also tell our founders that my goal is for them to make a whole lot more money than me, and eventually become my investors in other funds, right?
And you mentioned the firm comes from a long family line of entrepreneurs. Would you tell the story of that?
Sure. So I guess technically speaking, I'm fourth generation. My great grandfather was part of the, the cohort of shrimpers and trappers, in southern Louisiana in the marsh. Whenever they discovered oil, he had a boat, and the oil company said, "Hey, we have no idea how to get these supplies or people to these boats because the marshes are terrible, and we can't bring people from outside the area to run the marshes." And so, an entire industry was born from that. My great grandfather being one of the early pioneers and having, basically kind of wrapping and creating a business, incorporating it in, I think, the 1950s. Wow. And then my grandfather was a serial entrepreneur. He went to first in his family to go to college, I believe, and he graduated in math and electrical engineering. Started a cable TV business. Everybody thought he was crazy. Kind of turned out well. And then having a business that cash flowed in good times and bad, allowed him to invest and redeploy the capital into other industries. He ended up getting into the garbage business, buying a couple of different banks. We've had 4 different commercial banks over the years. We had a car dealership. That one didn't go super awesome, but we had an electronics store, same thing, didn't do super awesome, but tried. Right. And but on the whole, we've been lucky more often than not. And so I grew up, spending a lot of time with my dad, late hours at the office, and going to the cable company, and tinkering with electronics and playing with stuff. And it was kind of a great experience, seeing what it takes and understanding that. And I was just kind of put into a fortunate position where I was able to really execute and focus on what I wanted to do. And and I love this work.
That's great. Is the cable brand still around? Is that channel?
It's been purchased twice since then. So of all those businesses, we have one bank that's kind of left, if you will. Everything else we've exited.
Okay. What's the bank? So for local folks,
it's not super based. It's called United Community Bank. It's about 500 million in assets. So like not tiny, but not super big. Right.
And that's New Orleans based.
It's more of the bayou, we're actually a bigger presence in Baton Rouge than we do in New Orleans.
Okay, right on. Very cool. Okay, and so how did you come from all of that? I mean, I can see the entrepreneurial thread, but tech venture capital, it's a different beast, and you're in it. So what was the transition for you?
Yeah, so it's funny, you don't know what you want to do until you know what you want to do. And for me, so I worked at the bank. I started working in the bank out of high school, through college. And, I was always, I was the guy they put in the back room and say, "Hey, you go do math." I said, "Okay, I'll go do math. That's fine." They wouldn't let me talk to people, right? And it's for the best. It's mutually acceptable, right? It's all parties. And so, so we, so really, we were selling our boat company, the energy services business in 2013, right? Great timing. We were very lucky. We sold it that October 2013. The oil crashed in November, so pretty good timing. And so we were very lucky, and and so at that time, we were having a liquidity event. I was having liquidity for the first time in my life. Mm-hmm. And, and I was working at the bank, and, I was also kind of soft talking to a couple of different groups that were trying to recruit me. One, couple, they wanted me to move to San Francisco. One wanted me to move to Atlanta. One wanted me to move to New Orleans. And then another one wanted me to build a practice, in my market, the Bayou region, is I guess what we call it. And so, so we've, so I guess I was just kind of like, I've got liquidity. I know I want to invest my own money. I know that I don't like a lot of these financial advisors. They have a time, they have a place, and they have a reason for being. And I get that, it's a very respectable job, but that's not like, I'm not a big picture allocator. I'm gonna get my hands in the weeds analyst and work through stuff, and I spent a lot of time at the bank on automation projects and trying to be innovative from within. And, you'd always hit a ceiling, right? It was just a heavily compliant driven industry. It's much more like a utility business than anything else. And, it just wasn't as super exciting for me, even though I was on a path to be the CEO, but it wasn't what I really wanted to do. Some of these opportunities were alluring, and so I thought it was interesting. And so I, went on a couple of interviews, talked, just kind of understanding what was out there. Ultimately, I was like, well, taking a step back here, right? I want to, what I learned or what I discovered was I want to own my own business. I want to have some amount of discretionary authority over the capital that I'm investing, right? And I want to leverage my own capital with the capital of others, right? At the very least, initially will be other family members. And I feel like I should be paid for that service. Of course, you give good deals because I'm family, just want to make sure my overhead's covered, right? I'm not trying to kill anybody. I'm more for the capital gains and for the experience and for establishing track record and positioning, right? And so, so that's kind of how we started, and I pitched my brother and my dad, and I said, hey, I'd like for you guys to do this with me. Let's form a general partner entity, and let's raise a series of limited partnership vehicles, and kind of see what happens, pursue some strategies and be opportunistic and invest our money, raise money from the family. They can pick and choose what they want to do, no pressure, all that kind of stuff. And, and it's kind of worked. And that's, and so over time, right, initially we started off doing some real estate. We started doing some lending. We started doing all these different things that were really close to my original, classical education, if you will. Right. But the interesting thing here, or what I think is interesting, right? It's my story, so everything's interesting for me, right? is that there was really not a lot of alternative investment companies here. There's not. I can count on one, maybe one and a half hands, how many firms there are in Louisiana that are doing some form of alternative investing. And, that ranges from hedge funds, private equity funds, and a couple of micro VCs. And so, there was a lot of self-discovery, right? Doing this general partnership structure made a lot of sense. I was able to check the boxes for all the things I was looking for. But I hadn't, what is a fund? How do you run a fund business? Just never saw it, never ever interacted with it, came across it. And so I had to do a little bit of, call it scrappy figuring it out. And, I spent the first, 6 to 9 months or so, I was cold calling service providers, and I was saying, hey, I'm starting a fund to pitch me your business. And, they would pitch me their business as fund admins or accountants or law firms to some extent. And I would write down the terms. I didn't know what they meant, and I'd Google them, and that would take me down the Google rabbit hole, and I learned the business from the ground up that way. And, and so that's kind of how I learned the fund kind of business. But really going from there, transitioning over to why tech, right? So kind of maybe that answers some of the question of how I got to a fund business, but then getting to why tech. So over the course of those iterative funds, right, those iterative SPV vehicles and testing strategies, I started doing tech, and I started realizing very quickly, man, I love this stuff. And I feel like I was bred for this, But just similar as the other thing, I didn't have a lot of experience.
And when you say doing tech, you're seeing tech deals and started getting interested in them?
Yeah, that's right. And started doing a couple. Getting hosed on them, doing things right, doing things poorly. And being why the hell, why did I lose money on this? I followed this checklist that I found online. I learned all this stuff, and
right.
What did I do wrong? And it's it's not necessarily that I did anything wrong. It's that I just didn't understand, the business as I do today, which is completely night and day. Another thing too is that it's not enough to just read books and understand what the market is, right? Or what pontificators out there with microphones are saying, hey, venture funds do this. We take bets on only people, and that's all that matters. Revenue doesn't matter. This doesn't matter. It's but localizing kind of some of the marriage of how do the fundamentals of traditional venture work versus a localized market like ours, where there's not a lot of exposure, there's not a lot of education, and there's a handful of groups that seemingly own all of the mouthpieces in the market, right? And so, so really it was kind of this hard learning period that I had to have, and figuring out, just how to make this work. And so, I ultimately I ended up meeting one of my partners today, Mark. He, he was representing a company that we were investing in, and we hit it off. He was, he's a lawyer, and and we hit it off. And then all of a sudden, we just started looking at a whole bunch of stuff together. He had spent about 3 years or 4 years or something at Wilson Sonsini, and in Palo Alto, and moved back home to build a practice focused around startups in Louisiana and New Orleans, right? And so since then, he's done like 500 venture deals,
That's great.
and representing a lot of people in those same market coverage areas, so becoming an expert himself. And so, and so kind of his pairing with my experience, his experience, and then my brother also playing a big role in helping us get all of these things into place, really led to the cultivation and development of this, of the strategy that we're, executing on today. Right, which is a very well-refined, very specific and focused strategy around kind of the elements I mentioned earlier. So how do we get there? It's kind of a long story. I'm taking up half this podcast for that.
That's great. It's great. How many years did it take you to go from A to Z on that, from amorphous to focused?
Yeah, so I realized that investing as a family group had a lot of inherent disadvantages versus investing as a fund. Such as? So that's a whole nother topic into itself, right?
Let's do it.
Right. So if most of the time, the families and family offices that are doing investing that I've seen, that I've worked with, that I've come across, wait for a lot of inbound deal flow, right? Okay. And what I've seen is that a lot of times the inbound deal flow isn't always the highest quality, and a lot of times that deal flow, it's different, right? Also, the companies that a family are looking to invest in and fund aren't always established in the tried and true venture way, right? So sometimes they may have a little weird terms on them. Sometimes they may have this or that, and so it's not always like the most post you funding them fundable by somebody else, right? Because they've been advised by their uncle who runs an accounting shop and, is trying his best to help them, but he just doesn't know the market. Right. And so, it just the deal channels for family offices are inherently different unless, you're somebody like one of some of these families that are really substantial, big names that have teams of people, they do it really well, right? But they run it like a venture fund inside their own shop, right? But that's a whole nother lift. So I'd say that like most of the, there's so many family offices out there, and a lot of them just, it's just a lot of inconsistencies. And so, whenever I was going and I was talking to a company or looking at a deal, I was always just thinking like, okay, well, if it's a good deal, I'm gonna try and do it, and I'm gonna do my due diligence and this and that. And whereas if you're a fund, you're focusing and you're thinking on it differently. You don't have the time to specialize in it as a family unless you're doing a very specialized family or office-oriented strategy. And so, there are, this give and take, pros and cons, right? Like a family office by definition should be extremely fast, right? And so therefore they should be much more nimble and should be able to deploy capital like that as long as you're looking at the right things and you're getting to the answering all the questions because you have a very defined decision maker group, right? But as a fund, it's different. And what I've also found is that a lot of companies, like I just put it to you this way, all the companies that we funded in our fund have, all of them have been looking for a venture fund to fund them. They were not looking for a family office to fund them, right? Whereas I've seen other startups that look for family offices to fund them, right? And so everybody plays a different role in the market. I'm not trying to knock one side or the other, family office versus this, or that. It's everybody kind of plays in the market. Increasingly, family offices are being more and more sophisticated, and they're trying to do more and more in-house and avoid the fee load of working with a venture fund. But they're, the ones that really do that well, in my experience, are very, very few and far between. and most of the time they have dedicated staff. I'm sorry, that was like super long-winded. I keep trying to like hedge myself and stuff, but
No, great. It's great. Let's take the. I got the point on that one. Let's jump over to New Orleans because I think there's an interesting conversation. I know I'm narrowing a little bit the scope of the geography you're really servicing in talking about New Orleans, but I think it's the closest hub. Fair to say. When we talk about niche venture markets on a national scale, the stuff TechCrunch is focusing on, and all the other great tech rags out there, they're talking about Miami and Austin. New Orleans smaller. Right, I looked it up before the call. 2010 census, less than 350,000 folks.
If you combine Lafayette and the greater New Orleans region, I think is 1 million.
Okay, I was going to ask you if there was a broader MSA there.
That's right, but if you look just within the city, it's the 350. Same thing in Baton Rouge. It's like Baton Rouge has got a good slug of people. There's actually been talks. I don't know. I mean, it's just hearing conversations about people saying, "Oh, we should, combine New Orleans and Baton Rouge in a single MSA because then we'll get bigger numbers." And it's like, why don't you focus on bottom-up economic growth and then let the numbers take care of themselves? But that's just me.
Right. Okay, but not a huge population overall relative to on a city level, right? Not small, but more medium. And not everyone's going to be in tech. How large is the tech ecosystem? How do you measure and think about what's going on down there in terms of scale?
No, that's right. So it's not huge. There's a lot of aspiring people, and there's a lot of people adjacent to it, right? There's been a couple of wins within the state, and there's been a couple of wins within the state, a couple within New Orleans that are pretty advanced. Turbo Squid just sold for $75 million after, I forget how old they are. They've been around for a number of years. And then I think Lucid's gotten pretty big and has a bunch of employees. And I think Level Set has raised all the way through a Series C. They're more traditional SaaS. They're formerly Zlean. And then there's and then Rosalia is growing very fast, and that's one of our portfolio companies in our current fund. I think they're on a good track to be really big. But I think, but as far as the tech ecosystem goes, I mean, it's not super big. I mean, you're right, and so that's a lot of, it has a lot of very high culture elements to it that a lot of tech hubs have, right? I mean, New Orleans is one of the most notorious, very culturally driven cities, right? But New Orleans used to be a big energy hub as well. A lot of the energy from there left for Houston as soon as Texas had basically no income tax, and so a lot of Texas engineered their entire economic system around being very favorable for energy production extraction. So New Orleans lost a lot of the domiciled businesses out there. I mean, Louisiana, we have one Fortune 500 company, and it's Entergy, and Entergy is a utility company, but yeah, and so. There's a number of companies, there's a number of nonprofit initiatives. I mean, just trying to talk about New Orleans in its own, there's a handful of these, they run accelerator programs, some run incubators, some do all these different things, but for the vast majority of them, they're all nonprofit organizations, right? Which is, I guess, in my view, I'd like to see more for-profit incubators, accelerators. I think that would do a lot to drive the right incentives, right? Right now, a lot of these groups are chasing over each other for fundraising to exist, and it's tough. That's a hard model to run while at the same time trying to support entrepreneurs and early stage companies. Really kind of the initial tech boom, if you will, that we had in New Orleans was what a lot of people attribute to post-Katrina revitalization, right? So post-Hurricane Katrina, right? There was a huge washout, right? A lot of damage, and then a lot of stuff started getting fixed. The city started bouncing back and coming back. And on the tail end of that, right, cost of living was very low, high cultural epicenter, and so it became this magnet for a lot of people, right? And they had a couple, and so a handful of tech companies were starting up around that time. That was right around the time my partner Mark came back from Silicon Valley, started doing his legal practice, and so, it's kind of this interesting, nexus was sort of formed, right? All of the state level economic development programs are kind of localized in Baton Rouge, right? Some of them have state mandates, but most of the time they kind of really focus around the Baton Rouge area. So Baton Rouge has kind of got its own thing going on. They tie into LSU a lot. New Orleans ties into Tulane a lot. Then Lafayette has its own new thing going on. I say new. It's funny. I don't know if you realize this. I didn't. But University of Louisiana in Lafayette has the second oldest computer science program in the country.
Huh.
Yeah. The oldest one was MIT.
Oh, interesting. And are they pumping out a lot of engineers, or is it?
Yes.
Okay, interesting. Where are those folks going? Are they staying in the area when they graduate, or are they getting poached out?
Yeah, so there's a couple of big companies that have done like these economic development deals in Lafayette. They don't get nearly as much publicity as you see in New Orleans. I think CRI is one. Baton Rouge is a couple of gaming companies like the EA, and some of those have like spots in Baton Rouge, but IBM too. But then in Lafayette, it's a lot of engineering, but people don't always stay there. Waiter sucked up a ton of them. Waiter was acquired by a SPAC, I forget, a couple of years ago. They've been beaten down in the public equity market. I think I don't understand why, and I think they're doing pretty well. But there's a food delivery company, but they were based there. They have at one point they had like 2,000 employees.
Hal, let me jump in here for a second. So you mentioned earlier that a lot of a lot of the energy business moved to Texas when they changed their tax laws.
Yeah, I think so. I think that's how it goes. Yeah.
When that bounced out, what sectors have been kind of predominant? When you're looking at investing, are there strands? Is it e-commerce? Is there still energy stuff happening? What's common down there?
Yeah, so it's interesting. You ask, like, if you were to ask certain people in certain circles, in some of these, call it quasi-economic development nonprofit groups, they would gravitate towards, they would say energy, manufacturing, some chemistry, and then food and beverage are kind of big staples. I would say that, me personally, my thing is like, I think we still haven't quite found our niche yet. We still haven't we haven't broken out of the energy emphasis, right? Louisiana is still tied to a lot of energy, right? As far as GDP goes, as far as job creation, a lot of it revolves around manufacturing, and manufacturing related to energy. It's like, God forbid we do anything outside of energy, it seems. And that's, that's one of the things that I preach, and I get very preachy about, so forgive me, but, I think that what I'm doing and what people like me are trying to do within the state, and finding ways to diversify our economy and finding ways to invest and support new emerging businesses and helping cultivate a local startup ecosystem is the best, most efficient way to really drive future economic growth and really drive, really attract people in for our values of culture and for a lot of the outdoorsy things that we have to do. So the only thing that I joke about all the time, so the best thing we can do is probably legalize pot. And then then we have legalized pot. We have lots of outdoors activities, and it's a party city with lots of deep culture, and low cost of living. It's like the missing part of the trifecta or whatever,
Mm-hmm.
But it's kind of goes in there, right? But I think I'm sorry.
What is the state doing and the local community doing to kind of attract and develop the startup community? I did a little research before this. I bumped onto NewOrleansTech.com, and one of the things they referenced was some tax incentives. What are the tax incentives for people listening who are thinking about, wait, we're post-COVID, remote world, maybe I'll hole up in New Orleans and build my business down there. What do they have to look forward to?
Yeah, so there's a handful of really nice tax incentive programs. Before I kind of talk about them, I'd say the danger of that from an investor perspective is to just consider that it's tax incentives don't make a bad deal good. They make good deals better. That's the only thing to say. And that's how I view it, and that's how my partners view it. It's like, hey, we get some, awesome, right? That's not why we're investing. But in essence, right, what you can get, so angel investor tax credit is kind of one of the big ones. I think you can get 25% of your investment cost back in tax credits, right? So if you put $1 million in a company, you'll get $250,000 in tax credits, provided you find all the qualifications and all the government stuff. And then they have the technology commercialization tax incentive. Where basically if you're using a state-based research institution and you're commercializing some innovation you're bringing it into commerce, then there's some incentives related to some of the research. And then there's digital media tax credits, right? It's why we have a couple of decent-sized development shops. So basically you track hourly how many, development hours you have, and you could submit for a rebate, And that's been a very juicy incentive for a long time. That was a big carrot for DXC Technologies, and why they came and posted up in New Orleans was that, and then the employees and jobs program that the state economic development has. And then they had another one, research and development tax credits. If you work with one of the research institutions and you commission some research projects or whatever it is, then those will work. I mean, I'd say that those I've seen happen more with chemistry and hard technology, nanotechnology related businesses,
right?
And affiliation with, a university or two. And then they have a couple of tech transfer programs as well out in New Orleans, from Tulane and some at Loyola, some at UNO. And so, there's a handful of startups that are kind of in those arenas,
Okay. So the region's got some development talent, some hubs for that. It's got a great quality of life, a low cost of living. There's some tax incentives that sound pretty material, particularly the angel one sounded pretty
it's nice. Yeah.
Yeah. Who are you seeing down there investing with you? Is it mainly local folks, other micro VCs, other family offices, or are you seeing, VCs from Austin or Atlanta coming in, or are you seeing folks from Silicon Valley, Los Angeles, New York coming in?
All of the above.
All of the above. They're all showing up, and it used to be that a lot of VCs didn't want to invest outside of their geography because they'd have to deal with the board meetings. And that was before the remote days. I don't know how remote's going to totally change that culture. But I assume it's kind of opened up a little bit, the ability to invest in different geographies conveniently.
Yeah, I mean, so that's what we've been seeing increasingly. So, they've always funds from outside of the area have always kind of tinkered, have always been in the periphery, right? I've always oh, hey, I'm coming to town. Would be great to grab lunch and, see what you guys are looking at and working on, right? There's a deal that we did that they had raised a lot of money from New York and from some, call it mid-sized firms, and they liked that I was local, right? They said, if we need you to go drive by the office and make sure they're working, we'll give you a call. And I was like, But, so that's what we're finding is that we're working really well with a lot of funds that have an interest in kind of, just looking out, branching out a little bit, But yeah, geography has not been the same. And it's a good question. That's another good question is really how many, are virtual board meetings going to be the norm from now on? I mean, they were starting to become the norm even before COVID. I don't know what you've seen, but I mean, I was definitely seeing that with a couple of companies anyway.
Yeah. More often than it used to be. That's for sure. I think video chat used to be crappy, right? You couldn't have a reliable signal, you get dropped. And now it's pretty reliable. So I just feel like the timing of that with COVID and looking at figuring out remote, all of mine are virtual right now. All of them.
Yeah.
And it's perfectly fine.
Yeah, no, I'm with you. I have kind of craved doing in person, or at least do one, after we closed, the last deal we did, after we closed that one, we, I was like, hey, look, let's get together and do an in-person board meeting, and then we could do virtual after that. I just want to get everybody in the same room together first,
Yeah.
And just establish the cadence, establish the relationships, kind of solidify, because you have that initial post-closing first board meeting kind of
and you're chatting and becomes a little more personal and human.
Right. Yeah. And so, there's things I miss about it too, seeing people. I mean, of course, most of the time I'm sitting on boards that other people are flying in for, right? I'm not the one having to go out. So of course I can, I like that, it's fine for me.
Okay. All right. So the region has a lot to offer, right? It's growing. Whether you know it or not, I'm sure there's other people who would kind of claim some of this title, but you're kind of positioned as one of the godfathers of the region, putting a lot of effort in early, which is cool. I think you're going to have a lot of impact. What does it need? What does it need? What does New Orleans need? That whole region down there. What needs to be better to kind of take it up a notch? And I watched a little anecdote. I watched New York. I would say the second, third leg of New York. People said this before on the show. Have a short memory in tech, but New York was doing a lot of stuff in probably the 80s and definitely the 90s. And I got involved in 2006 on the venture side. And it has come such a long way since then. Drastic change, exponential change. But it's putting together the infrastructure of kind of a whole community and culture and training, all these pieces. What's needed down there, and how can the folks listening to this help?
Right. So, one of the things that we've seen and, we've kind of come to the conclusion on is that we really need like a culture of doers, right? We need people in our markets who actually go and do things, right? Let's not talk about it. Let's not commission a study. Let's not research this. Let's not flirt with the idea of it. Let's do it, And so, we believe that some of it is that there may be some misperception or just a risk aversion to going and doing something or trying something. But it's broadly kind of intended, right? Because, being a founder, CEO is very hard, right? It's not an easy job. The bigger your company gets, I think the challenges change, but, it's not easy. It's never easy. If it was easy, everybody would do it, right?
Right. But when you say we need a culture of doers, founders and CEOs who are moving the ball forward, they are doers. Who are you talking about? Is it you need more founders and CEOs, or there's other people around the ecosystem that aren't doing?
So I would say that there are some founders who are not doers, and some things that we see that they're not doers. And there's a big difference, right? It's that, you may have left and you may have started a company, but are you really operating a lifestyle business that's masquerading as a startup? Are you really running the business for any purposes other than to, I guess, keep kicking the can down the road so your rich investor doesn't lose their shirt, right? And I think some of that comes from, so I guess there's a long life. There's a lot of, what's the right way to say this? There's a long lifespan to some companies that should have been quickly recycled, right? And it's not that it's a bad business. It's not that it's a wrong business. It's just like the timing, right? The effort that it requires, the energy has to go into it, or the funding's not there for that business, right? Or maybe it's just not a fundable company, right? And it's on life support because, one or two people put money in and they're forcing them to figure it out, right? You have a lot of zombies, I find. Companies that seem to be raising money constantly with no progress.
Is that pressure coming from the investors who are kind of putting good money after bad because they don't want to lose write down an investment? Or is it the founders not driving, or both? We call these companies the Walking Dead, by the way. We have a phrase for it.
There's a lot of reasons, right? And it's I think that some of these businesses can get on a really good path for venture-like growth. But I think really what you need to come to grips with, or what people need to come to grips with, is look, if you're not going to be a hyper-growth company, then you're not a venture company and not a venture-backed or venture-backable company. You are a lifestyle business, and there's absolutely nothing wrong with that, right? Same thing goes with hey, you did your best to figure this out. If you can go and try and sell the company for some amount of money because you have some amount of value, and sure, it's not $100 million, it's not $50 million, maybe it's 3, maybe it's 2, but it's something. Right. You do that, and then you recycle the talent. You get people excited about the next opportunity. The founder can take those lessons and replicate or learn or reinvent.
Exactly.
A lot of those things are what I see is that that to me would kind of fall in some of that category. Another thing too is there's a lot of people out there that talk a big game, that say, oh, we're going to do this, we're going to do this, and nobody does squat. And some people who are listening that may know me may be like, oh, you've done that to me. It's If I did, it wasn't on purpose. I promise.
Okay, but when you say they're having on squat and talk a big game, what is that? It's say they're going to put money in and don't. Is it build a company and don't?
Yes.
What are we? It's all these things. Okay. All right.
Yeah. So things like that. I mean, it's a lack of like really trying to put some gusto behind it, really move it forward, really put your heart and soul into it, or halfway do it, or, oh, I'm going to do this and keep my foot in one door and the other, or,
why do you think that's missing? You're describing that as I think that dynamic is probably everywhere, just a question in what ratios and what proportions. But you're saying as though it's more common maybe than other places. Why is that?
You see, it's a good question. I don't know. And maybe it's because there's not a lot of what I would kind of classify as institutional focused venture, right? So maybe like, hey, we've got deadlines, we've got things we've got to take care of. This can't sit. Like, sorry, but we have to move on. We have to do something else. Or, hey, look, we'll support you and try and help you find a job after this. Or, just anything like that, right? Like,
right.
One of the things I loved about, so Brad Feld's book, what was that? The first one that he did, that was, a lot of people talk that got everybody all excited.
Deals?
No, it wasn't Deals. That's a good one. I know that one. It's like Startup Communities, I think. Startup Communities. Okay. And in that one, one of the things they did was they would do like almost a funeral for companies that didn't make it, right? I think like that kind of cultural element, just, it sounds fantastic to me. I mean, I think it's like, look, you tried, you did your best, you hustled and you worked very hard, but like, there's no shame in hanging up the towel. Like,
right.
That's just part of this game. If you want to play in this world and you want to be in this industry, this kind of segment of the market, and that's just a fact of life. Nobody likes to do it, but I mean, there's no reason it has to be all or nothing. There are places along the way that are varying degrees of success. How many people, I can tell you that there's a handful of founders that we've come, that we work with, that it's not their first company, and their first company wasn't a smashing success. Right. And, it's just part of that journey, it's iterative like anything else. So, I think that's part of it. I think part of the issue too is that what I found, it's not just Louisiana, but it's also other markets, that emerging startup ecosystems have, a lot of times they're filled with individuals that will celebrate mediocrity if it suits their needs, right? So, some of these ragtag consultants, or some people who do a lot of consulting work or work with a lot of early stage companies, a lot of times they're not trying to pick the best clients, right? But they still, a lot of those individuals that get out there and talk about it in public and represent themselves as being a leader in the ecosystem, or leaders of the ecosystem. A lot of times they aren't, right? They're working with the only clients they can get. The most legitimate startups and founders are the ones that are, they're out there doing it, right? They're hustling, they're making it work, and they're being chased, right? And make no mistake, most of the deals we're doing, we're competing, and we're competing with other firms, and we win because of relationships, because of experience, and because we really try and do our best to help founders, and we work well with others. We're not big enough to take a whole round, That's not our MO anyway.
Well, what's your message for VCs listening in other geographies or local? How can they help? What's your ask?
I think that there's a lot of ways to do things together, and I think there's a lot of ways to work together and to support one another. As competitive as the industry gets, I think that there's usually some solution that everybody can benefit from or together with. I think that the more exposure that our companies have to legitimate companies on the coasts, and partnership deals and relationships, co-selling, reselling, integrations, whatever, those things really make a big difference. There's, and it's, a lot of times integrations in those deals, we've all seen it, that, the companies that are like really onto something, really firing on all cylinders, and are really going to, are really the hot deal, they don't have to chase those deals. But like, there are good companies that might not necessarily be in that ultimate super deluxe star class that are, that, if you give them a little bit of assistance, or maybe, there are a lot of good companies, there's tax incentives, all those things too. So, I'd say that, like, hey, give me a call. I'd love to help. I'd love to see what I can do to help, because, I want to encourage more people to do things, because I think it's part of long-term value of our strategy. Our strategy is great for now, and, our companies are fantastic, but, we need to continue to redeploy and reallocate, innovate, and all of these things. And we need to work with people from across the country, across the world. That's how this stuff works. It doesn't work if you're in isolation.
Hal, this has been insightful, and you're talking about the future now, and I'd love to follow that thread for a second. What do you see as the future of Callais Capital? Where do you see the firm in 10 years? How does it evolve?
Yeah, well, we've already evolved a good bit. We continue to develop and build, but we want to continue to focus on this thread, on this niche. We want to develop, we want to do our part. We want to work with founders who are really going to be doers, who are going to work hard, who are going to give and really try and lean into the marketplace, And, our strategy is really focused geographically now, for a lot of reasons, but we're looking at companies and deals, outside of Louisiana. We're looking all over the place. I have a couple of portfolio companies in New York, actually. But it just really is, I'd really like to see more people working together, and it being less of this winner take all mentality, And I think that how we interact with the market and how we continue to try and push the ball forward, at least with our companies, and helping our companies by connecting them and having them work with other companies that are not maybe necessarily locally based, exposing them to things outside of the market. Those are the things that lead to kind of compounding growth. So, for us, it's really keeping the ball moving in the direction that we're pushing, right? And kind of expanding from there, expanding on that, and really trying to drive home, a lot of the stuff that leads to, to really benefit for everybody. That's a big part of it. Is that, the thing is that this is, the market is a wild and unwieldy thing, right? And, you have to do your best to work within its confines, and to work within rational thought and not take enormous risk, right? And so there's always a balance, and there's always a fine line that everybody toes in really trying to, figure out the direction of their business. But it's not a zero-sum game, right? And I think that's one of the biggest problems that I see in the marketplace. And so, I think that our goal is to really continue to drive the ball forward, be a leader where we can and where people will have us, right? And so look, we got plenty of stuff to do. I'm not looking for new stuff to do, but I genuinely want people to succeed. And just because I can't work with them doesn't mean that I don't want them to succeed. And so our future is going to be continuing our model, continuing to build upon what we've established, and continue to expand. And obviously working more with people like you, Mark, and really trying to figure out what's the right ways that we can have cross-portfolio collaboration. What's the ways that we can work together and, make everybody win. There's winnable scenarios for everybody. It's not a zero-sum game. So, I don't know. I'm kind of like, I'm still stuck on my previous topic and answering my question about the future. But, I don't know how succinct you wanted me to be on that. But
no, it's great. Look, I think you and I share a core belief that innovation and entrepreneurship drive socio-political, economic values and success. And so I think what you're doing is not just a great business opportunity, but a social good. So thank you for doing it. Keep it up.
No, absolutely. The way I tell it, just to be clear, I feel like I owe it to the record to say it. But, and I say this to my investors, is that, look, long term, if we do a good job doing what we do, then all of these things come to fruition, or these things have a much greater probability or chance of occurring, right? But it all stems from strong returns, minimizing risk, and working with founders who are going to be really dedicated, devoted, and running real businesses and share vision, right? Those are the things that, if we don't have returns, then none of this matters, right? It's all moot. So, that's the way I look at it.
Hal, thanks for being on.
Hey, you got it, man. Let me know if you want to go fishing.
Yeah, I'd love to. Not kidding.
Not kidding.
Well, that was great. I love learning about the venture scene along the Third Coast and the Mississippi River Valley. Sounds like an innovation hub to keep an eye on. I bet you a lot's going to happen down there. If you liked what you heard, please hook us up with a like or a 5-star review, and feel free to share with a friend. You can find me on Twitter @MPD, and to hear more of my conversations with innovators, subscribe on YouTube, Facebook, or any major podcast platform. Just search for Innovation with Mark Peter Davis.